now let's talk about three groups that contribute to money creation. So now a useful simplification that we can take is the money supply is exogenously determined by the central bank. Now it is true that the central bank does have a strong influence over the money supply, but there are other actors in the economy who also contribute to the creation of money supply. So let's discuss the three main groups that contribute to creation. So let's start with the central bank. Now, since the money supply is monetary base into money multiplier, so the central bank can influence the money supply by either influencing the monetary base or the money multiplier. Now, let's first talk about how it can influence the monetary base. It can do that through open market operations and discount. So now open market operations are the buying and selling of government securities by the central bank to inform the public in the open, where an open market purchase, which involves buying bonds in exchange for money, would increase the monetary base, and an open market sale, which involves selling bonds, government bonds in exchange for money, would decrease the monetary base. Now, it can also influence the monetary base through discount rate. Now, discount rate is the interest rate the central bank charges for lending reserves to commercial banks to meet deposit needs. So, by influencing the discount rate, it's influencing the penalty of borrowing from the central bank and thus influencing the reserves through which it will affect the monetary base. As we know, okay, monetary base is reserves plus the base. Now, the central bank can influence the money multiplier as well for a given stock of money. In order to influence the money multiplier, it can change the required reserve ratio. Now, the required reserve ratio is the minimum amount of reserves that banks should keep from deposits they receive from customers. So, through the required reserve ratio, the central bank influences the reserve deposit ratio, and through that, it influences the money multiplier. So now the second group that can contribute to the creation of money are your commercial banks. They will contribute to money creation in a fractional reserve banking system, where they hold a fraction of what was deposited as reserves and they loan out the rest, because it is through lending money to borrowers that they contribute to money creation. If they apply 100% reserve banking, where they hold all deposits as reserves, they will not create any. So banks essentially contribute in creating money through the reserve deposit ratio, through which they affect the money supply and hence the money supply. Third group that contributes in the creation of money is the general public, who hold money as currency as bank deposits. So they contribute money creation to the extent that they decide to hold some of their money in the form of deposits as banks rather than all of it as currency. So the public contributes to creating money through the currency deposit ratio, through which it affects the multiplier and hence the money supply.